this Bitcoin cycle is surprisingly similar to the last one, and it is actually very, very similar, and that's why we have to talk about it, because I think we're gonna play out in a very similar way this time, just as we did last time. So let's get into it. So last time, if we look at here on the weekly chart, the 54 simple moving average, this is the last cycle, right, in 2022. First of all, let's put both next to each other so we can compare these. This is the current cycle and this is the last cycle, okay? First of all, the first similarity is that we had a bounce here from the 54 simple moving average on the way up, okay? That's the first similarity. Let's make it a bit larger. The second one is we had a double top basically, here double top, and then we had also a double top for the current cycle, right? That's the second one. The next one is that we have a bull flag forming here, and we had the same bull flag forming here, okay? That's the third one. Now, if I go a bit, zoom in a bit to the daily chart, then we can also see that not only did we have a double top, we basically had another double top at the end, right? Let me show that to you guys. So once we went up, we had two tops here, 1, 2, and the same thing right here, 1, 2, before we then went down. And on the way down, a very similar thing is happening. If we actually, let me go back to the weekly. If we go on the weekly here, and we see on the way down, last time we bounced from the 54 simple moving average. So we went down, we had a crash, but then we bounced from the 54 simple moving before continuing to go down. And a very similar thing I expect to be happening right now. This is the same 54 simple moving average. We went down, we had a crash. We're looking like we're gonna bounce soon, which the line is around $101,000 per Bitcoin. And therefore very similar to last time. Now, if we go to the daily and we put across actually the 200 simple moving average, another similar pattern emerges. We are about to bounce from here. If we go to the last cycle, we did actually also bounce from here. So what I think is a good thing to do is basically to take profits from between the 200 simple daily moving average, which is between 100 and 5,000, to, if we go back to the weekly and we put the 54 simple moving average, this line lies around about 101,000. So between 101,000 and 105,000 is a good point to start taking profits. Before then, I think we're gonna continue going down. And now the next thing I want to talk about is the business cycles. So what I think is gonna happen is actually this time we're not gonna crash 60% like last time. Last time we crashed down a good amount actually, from the top to the bottom. 60-70% we crashed down. This time I don't think the same is going to happen. We're not going to have as bad of a hit. So why do I think that? Well, first of all, we have to talk about the 4-year cycles, right? And the 4-year cycles are still, in my opinion, very much intact. You can see these orange lines is the halving events. And if I show you guys the halving events like this, we can see that usually we're going up for 1,065 days approximately from the bottom. So let's go here from the bottom to the top, and to the top here, approximately 1,065 days. If we do the same last cycle, the bottom was approximately here to the top. It's also around about 1,000 days. And I think the bottom was here. If we go to this cycle, the bottom was here, and we go to the top, also around about 1,060 days, right? So we have the 4-year cycles definitely happening every time. If we now look at the S&P 500, which is showing us the market health, the US S&P 500, and we overlay the M2 money supply, which is just how much money is in the market, if there's more money printing going on, then the money supply goes up. As the money supply goes up, the market, the S&P 500, and the health of the economy usually goes up. As there's more money coming in the economy, this money flows into stocks and companies. And you can see very close similarities. As the money supply goes up, the blue line goes up, the S&P 500 also continues going up, and it has been like this for many, many years. Now, what I want to talk about next is basically an index, which is this green line. So another way to measure the cycles is by the manufacturing index. And this is the ISM manufacturing index. And this one basically tells us how many goods are manufactured. So these directors and CEOs of major companies are being asked on a quarterly basis about how they think production levels are. And based on that, we have an index. So this index is telling us the business cycles of the US economy. As they go up, as this means there's lower interest rates, so there's more money flowing in the market, more liquidity. As there's more liquidity, production will be higher as people will start buying more things, companies will start producing more things. And this is gives us a good idea of the economy and the business cycles that we are going through. As we are going through expansionary business cycles, here for example, we have Ethereum, we can see Ethereum pumped. We had another cycle, and this is always a 4-year cycle coinciding with the crypto cycles. Again, last time, the business went good, liquidity went higher, the manufacturing index spiked, Ethereum went up. But look at this time. While we had the traditional crypto cycle, the manufacturing index did not really go up. So we have not seen that pump in the US business cycle yet. And I think, and that's why also we can see that, for example, Ethereum has not really rallied as drastically as the last 2 times. You see, it has not gone as much higher. Same it goes for altcoins. And same goes for Bitcoin actually. If you compare how much Bitcoin has gone up this cycle compared to the last few cycles, the percentage rise was not as high. Now, we are due for a pump, right? We are due for a reduction in interest rates, more liquidity coming in the market. Trump is talking about it all the time that he wants to reduce interest rates. And this will then bring liquidity in the market and push up the business cycle. We're going to have a new business cycle coming very soon with a lot more money coming in the market, a lot more inflation and lower interest rates. And this will eventually push up the Ethereum and the altcoins, and in my opinion also Bitcoin. And as we have this happening, we are going to see a pump happening very soon, in my opinion, as soon as we have the drop of interest rates. So I don't think we're gonna be going down for that many months, or at least not that much. As soon as we have a drop in interest rates and more liquidity coming in the market, we're gonna see a relief. And if you ask me where I think we're gonna be bottoming out, I think it's very likely around about 65,000 per Bitcoin, which is around about the last support area here. If you go to this support area, it's also around about 65,000. And that's where I think we might eventually bottom out before rallying. And then once the inflation goes higher, once the interest rates go lower, we're gonna rally up again. Hope that made sense. Hope you guys like this. See you guys next time. Bye.